Oh, hey, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. So before you go, make sure you guys hit that like button that feeds the bots, runs out there and finds somebody like you to share this information with, and comment throughout this video. If you guys have something you want me to talk about, I'll be happy to look over there, keep my eyes on that, and try and cover all the concepts you guys are interested in as well. And subscribe. There's a little button next to the subscribe button that will give you an indication as to when I come in unannounced, just popping in here to talk about trades or opportunities in the market. So make sure you guys have the bell lit up for those indications. All right, without further ado, let's talk about the economic data across the pond. Not really a whole lot to talk about other than we come back here and Canada has some economic data that we can talk about. Core economic data or core retail sales for Canada. Remember, that's going to strip out the more volatile aspects of that being food and energy. So that number coming in for retail sales is, negative 0.2%, expected to be negative 0.1. It's better than expected on that. And then when you add back in the food and energy, we have a better economic data point here as well, coming in at negative 0.6, expected to be negative 1.6. So Canada, really all we have to talk about, other than we have some more Fed governors speaking in today. So that is going to weigh on the market. But what is driving the market today? It's really lockdowns. It's back to that again, folks. I thought we were past that with the boosters and everything else. I mean, even there's data showing that Florida is doing better through this pandemic than California, which has more stringent mask mandates and vaccine mandates, all of that. Well, seems a little bit bizarre, but Austria is shutting down with the next surge in coronavirus. Germany is considering it with some of their regions really having some troubles there. So we're seeing some weakness across the board in equities and right here in the, let me pull it up, in crude oil. We're seeing some more weakness here. Why would we see weakness here? Well, the lack of demand. Now, I've talked about the demand aspect for crude oil being there with the manufacturing sector starting to ramp back up. But the real overarching dark cloud right now is the fact that we're seeing some countries start to close down again or do some lockdowns again. So that will impact the overall markets if we start seeing more and more countries doing that, right? Because then it goes back to the whole slowing of the economy again. So seeing some weakness here in crude oil. It's actually making some nice moves here. If we brought it down to a 15-minute chart, we'd probably see that the market is really rallying in the last hour or so. You can see bouncing off those $75 lows. But a real massive rally as of right now. Don't know what news is driving that, but it's the levers and pulleys of the markets right now heading into the open is all I can tell you. Is probably a lack of volume in there, and the strength is coming from probably some institutional clients coming in and buying that ahead of the open there. We got the anyway, bonds making a bit of a move, testing that value area. Gold holding on to that 1850. I think we're going to see that hold on, folks. We're not seeing any type of inflation ebbing. It's staying here. So that whole transitory aspect of inflation here with gold is going to hold on to that value. Because remember, when the market sees inflation, it looks for a retainer of value, and that is going to be gold. Now, remember, because it's dollar denominated, when that dollar weakens, that's what gives gold strength. And then Bitcoin bouncing off this 50-day simple moving average. Maybe this is going to be the first sign of some strength here in Bitcoin. I was not expecting it to sell off as much as it has, especially with gold really holding on to that value there. We've got VIX moving higher, and that's because I've talked about the weakness in the equities. Again, making some big moves right now in the news. I don't have any news coming across right now, but there seems to be something going on in the markets to get these guys to start turning around off of these lows that we are seeing from the shutdown noise that we're hearing. Staying above the trend channel here in the E-mini S&Ps. Now, it's not really quite back to the trend channel in the SPY, which is the ETF for the E-mini S&Ps, but we are in that trend channel. So it is very bullish, despite the fact that we're getting some consolidating type of candlesticks here, it is still considered to be a bullish pattern here. We haven't seen any type of topping. This is a continuation pattern right there. If it was out and above, like separated, like a gap or something like that, then that would make that candle look a little bit different. It would look like more of a shooting star, but we're not getting that. It's inside of this move. So it's not really going to carry as much weight as if it were out and above, like a gap type move. Got some kind of wild moves the last couple of days. I was expecting to see that weakness continue throughout the day yesterday, but we got the snapback and finished positive on the day, which was a true surprise to me. Today, the strength overnight continuing through with that. But you can see right when we started hearing about the lockdowns from Austria and Germany kind of following suit, saying that it is a possibility that they might start shutting down as well, giving us a little bit of strength here in the recent moments is probably due to some Fed governors talking or something like that. I don't know really what this is attributed to, because I'm in a in a hole almost, it feels like, because I have no information coming out right now. But seeing some strength here, I would not necessarily discount a late day rally, as some of the institutional folks are starting to probably pack up for an extended week. Next week we have the holiday week, and a lot of folks will take that entire week off. So we could start seeing some of these volumes really start to lighten up here. Usually when we see that volume lighten up on a Friday, that will be a more of a bullish type of move there. So that's what we're looking for in E-mini S&Ps, at least for today. And you can see the Dow Jones as well, making a move off of those lows in the recent moments here. Just a really nice, strong move here recently by 200 points. So something major happening in the markets right now. So watch your upside there. I'm going to actually, I had a couple of orders I was going to talk about with the E-mini S&Ps, but I'm going to cover those I'm going to cancel that pre-order there. Let me just cancel that order totally. If you guys remember, I have on a long strangle in the SPY. That's what I'm looking to take off here. And that is on the put side, I'm long the 430 puts and then short the 410 puts. That part of this strangle is pretty much worthless, right? But on the long side, I've got long the December 445 calls and then short the 475 calls to define that on the upside. I was looking to cover that because of these corrections we were starting to see here in the E-mini S&Ps there. So let me just pull up the SPY trade since I'm talking about that. So I'm taking this off because we might get that move here and test these all-time highs. It looks like we're getting some strength here. So, my thesis here is we're going to see some strength late in the day. I'm going to hold on to this SPY strangle because that long aspect of the 455, 475 call spread, that's where I'm making my money. So I'm going to let that ride a little bit more. Now, I do have a strangle that I had shorted earlier on. That's expiring today, and that is the 425 puts and the 465 calls. So you can see both of these strangles kind of beating each other up right now. The long strangle doing much better than the short strangle, but I'm going to have those 465 calls probably get called away from me. So I will be short SPY heading into the weekend. I'm not going to mess around. I'm just going to let the entire system do it. I'm not going to cover my calls and get out of that right now, but I'm going to let that ride out and see if I can't get out for $4.60. But at the end of the day, that's a little bit below where we are right now. So I'm going to have a little bit more of a pullback there for that strangle to be executed today. And other than that, keeping my eyes on PENN, didn't get out of my strangle in my trading account for that. Long strangle was a bit of a hedge against my long PENN stock in my IRA. But like I said yesterday, I'd much rather make money in my IRA and lose money in my portfolio at this point, because the IRA is tax adverse. All right, so that's about it for you folks. I thought I was going to be able to talk into the open, but without any comments over there or any other questions, I'm going to let you guys go. Have a great weekend. Hope this helps. And if it does, make sure you smash that like button. That helps feed those bots that goes out there and finds folks like you. All right. Subscribe and comment throughout the video. All right. Oh, that was terrible. I got to redo that one, folks. That was a total miss. All right. If you can't take that, take it easy.